U.S. Canada trade tensions escalate. Tariffs, energy, and political repercussions. The U.S. has just imposed a staggering 25% tariff on Canadian and Mexican imports, shaking the foundations of North American trade. With Canada considering retaliatory measures, including cutting oil exports and imposing tariffs on American goods, the economic and political landscapes of both nations stand at a crucial crossroads. What does this mean for businesses, consumers, and diplomatic relations? Stay tuned as we break down every critical aspect of this developing story. The latest trade dispute between the United States and Canada is sending shockwaves across multiple industries. This sudden move threatens the stability of the USMCA-TMEC trade agreement, potentially triggering economic and political consequences on both sides of the border. From energy supply disruptions to shifting political alliances, the fallout could be extensive. As Canada weighs its response, with potential countermeasures in oil and electricity exports, political leaders and businesses are bracing for a turbulent period. This in-depth analysis explores the full scope of the situation, shedding light on the impact of tariffs, energy dependencies, political reactions, economic repercussions, supply chain disruptions, and the future of U.S.-Canada relations. U.S. tariffs and international trade impact. The U.S. government's decision to impose a 25% tariff on Canadian and Mexican imports has sparked widespread concern. Canada, a key trading partner, is expected to retaliate, raising fears of a full-blown trade war. The move threatens to strain the USMCA, a trade agreement designed to foster economic cooperation between North American nations. The United States has long relied on Canadian goods, from raw materials to manufactured products, making these tariffs a high-stakes gamble. Canada's potential countermeasures could include imposing duties on American exports, such as agricultural products, steel, and consumer goods. Additionally, there is growing speculation that Canada could reduce its oil exports to the U.S., a move that would have significant ramifications for both nations. The economic strain of these tariffs extends beyond businesses, with consumers likely to experience increased prices and market instability. As tensions rise, the future of trade between these two allies hangs in the balance. Impact on the energy sector. One of the most critical sectors affected by this trade dispute is energy. The U.S. depends heavily on Canadian oil, importing approximately 3.8 million barrels per day. Any disruption in this supply chain could result in increased energy costs for American consumers and industries. Should Canada reduce its energy exports, U.S. refineries, many of which are configured to process Canadian heavy crude, would face operational challenges. This could lead to fuel shortages, increased gasoline prices, and further economic stress. Additionally, Canada supplies a significant portion of electricity to states like New York and Michigan. If Canada imposes restrictions, American businesses and households could face higher electricity costs and potential supply disruptions. In response, U.S. policymakers may look to alternative sources, including domestic oil production and imports from other nations. However, such shifts could take time and require significant infrastructure adjustments. The unfolding energy crisis underscores the deep interdependence between the two nations, highlighting the broader implications of economic conflicts beyond simple trade imbalances. Political reactions in Canada. The Canadian political landscape is undergoing significant shifts as leaders respond to the U.S. tariffs. Prime Minister Justin Trudeau has strongly condemned the move, calling it an unjustified attack on Canada's economy. Ontario Premier Doug Ford and Alberta Premier Danielle Smith have also voiced strong opposition, warning of dire consequences for Canadian industries and workers. Opposition leader Pierre Poilievre has taken a more aggressive stance, advocating for swift retaliatory measures, including targeting U.S. exports to Canada. Some political analysts predict that these tariffs could influence upcoming elections, particularly in Ontario, where economic policy is a key issue. With public sentiment rallying against the U.S. tariffs, political leaders are under pressure to take decisive action. Whether through diplomatic negotiations or economic retaliation, Canada's next steps will be critical in shaping the trajectory of this dispute. Economic consequences. The economic fallout from the tariff imposition is already being felt. The Canadian dollar has appreciated against the U.S. dollar, signaling investor confidence in Canada's ability to withstand economic pressure. However, industries reliant on exports to the U.S. are expressing concerns about potential revenue losses and layoffs. Businesses on both sides of the border are bracing for supply chain disruptions and increased costs. In Canada, industries such as manufacturing and agriculture are particularly vulnerable, as they depend heavily on U.S. markets. Meanwhile, American companies reliant on Canadian raw materials are already facing higher production costs. Public sentiment in Canada has turned sharply against the U.S., with calls for consumer boycotts of American products gaining traction. From grocery store chains to automobile manufacturers, businesses are monitoring how consumer behavior will shift in response to the dispute. The long-term economic implications remain uncertain, but the immediate effects are undeniably significant. Disruptions in the supply chain. The manufacturing and agricultural sectors are among the hardest hit by the new tariffs. Canada is a major supplier of auto parts and raw materials essential for American industries. With increased costs on imports, U.S. manufacturers may face production slowdowns, affecting jobs and market stability. Agriculture is another critical sector facing disruption. American farmers export significant quantities of produce, dairy, and meat products to Canada. Should Canada impose retaliatory tariffs, these industries could suffer severe financial losses. Additionally, delays at border crossings due to heightened trade regulations could further exacerbate supply chain inefficiencies. The long-term consequences of these disruptions may push businesses to seek alternative suppliers, potentially reshaping North America's economic landscape for years to come. Companies and policymakers must now strategize to mitigate these risks and ensure continued economic cooperation despite the rising tensions. The future of U.S.-Canada relations. The trade conflict poses a significant challenge to the historically strong relationship between the U.S. and Canada. Economic partnerships, long-standing alliances, and cross-border cooperation are at risk of deterioration if a resolution is not reached soon. Canada is now exploring diversification strategies to reduce its dependence on the U.S. market. Expanding trade relations with Europe and Asia could provide alternative avenues for economic stability. Meanwhile, the U.S. must weigh the long-term risks of alienating one of its most reliable trade partners. Political negotiations in the coming months will be crucial in determining whether this conflict escalates or is resolved through diplomatic channels. As both nations navigate the challenges ahead, businesses, policymakers, and consumers must remain vigilant, adapting to the shifting trade landscape. The unfolding trade dispute between the U.S. and Canada has far-reaching implications for industries, economies, and political landscapes. As tensions escalate, the need for informed decision-making and strategic planning is more critical than ever. Stay informed on this developing story by subscribing to our channel. Share your thoughts in the comments. How do you think these tariffs will impact the future of North American trade? Don't forget to hit the notification bell to stay updated on the latest developments. Together, we can navigate these complex global issues and stay ahead of the curve.